Meantime, we're watching pharma stocks as the president signs an executive order aiming to slash drug prices. That's been a tough trade, with the broader market outperforming the sector more than threefold over the past 5 years. Despite today's announcement, large-cap pharma names are actually a bit higher. Is this short-lived relief now that the news is out, or are there real investment opportunities right now? Let's ask Jared Holz. He's the healthcare equity strategist at Mizuho. A pretty wild 24 hours, Jared. So what are your takeaways? Welcome.
Thanks, Kelly. Really appreciate it. Yeah, I mean, I think today we basically learned that there's still a lot to be learned, and there really isn't a plan or a strategy in place that is scaring off investors a lot. I mean, we're basically recapturing here what the stocks across pharma and biotech lost across last week. So those losses are regained here. I think there's a lot of skepticism, like a lot of the president's plans of having real meat behind it. But we'll see as we move forward here.
What is actually in the announcement? I mean, part of it sounded voluntary.
Yeah, there's so much vagary as far as what we've learned over the past 24 hours here. I think the key things to look at are one, you know, when we look at the ecosystem of how these products are sold in the U.S. and what distributors and PBMs take as far as their slice of the pie. That seems to be something the administration's still focused on. That was part of the Trump, the first Trump term with respect to the middlemen and how much profit that they're gaining. That would be one. The second is when we look at the drug prices across international markets, is there a chance that the U.S.-based or the global pharmaceutical companies actually were to threaten those nations into paying more? That's where I think the street's becoming much more positive, that there's a way to actually increase prices elsewhere as to make the delta between the U.S. and international far less.
It was interesting to hear Dr. Scott Gottlieb on our air this morning say that basically the difference in price comes down to the difference in GDP per capita, in which case you're basically saying you expect drug companies to lower prices here in the U.S. with the highest GDP per capita and to raise them elsewhere with lower, basically, affordability and living standards.
Yeah, well, that's been the biggest kind of reconciling item between the U.S. and anywhere else, basically, over since this industry has started, is that we have more and therefore we're going to pay more. I think this government is obviously trying to angle a situation which makes it more equitable. The fact is that, when you look at the way that U.S. healthcare works versus Europe and other nations or other regions, it's very different. And so just having these economies of scale here versus not having them elsewhere makes us pay more. I really don't know whether this plan today is going to bridge the gap, but I think a lot of investors are hopeful that something gets done and it's not all that deleterious to the situation here.
Two more questions. One is to use the example of Jardiance that was in the Wall Street Journal, and I'll be off on the number slightly, but basically saying it costs $600 a month here and $70 overseas. Is your expectation then that the U.S. is going to get that down to $70 a month, or that other nations are going to have to raise their price more towards $600?
Well, that's the key question. It's not only for Jardiance, but pretty much every other key drug that we've looked at. It's probably a combination of both. I think there's an opportunity to raise it in other countries, at least, some amount, and then bringing it down in the U.S. and getting those numbers a little bit more equal. I mean, in some of the instances, and I think you brought up a good one, the gap is just so massive that something has to be done, and maybe bringing the prices up internationally is the way that we go first.